All right, guys, welcome to a new pre-market analysis. No, cap. It's automation. It's automatic. Welcome to a case study. It's been ages since I did a case study, but I have a case study on a trade I missed. I was so focused this morning on my workout. I did the pre-market analysis, then I closed my charts, and I had so much work to do. I was like, well, I had like the work was not that high low, so I could focus on trading. I just forgot. I was so soaked into my work or focused on my work that I completely forgot to trade. And it was just the areas were so beautiful. So I'm a bit unfortunate, but it is what it is. Let's break it down. I will make a separate case study on EU, and first I will do GU. And I said that this morning in my pre-market analysis, I said, all right, we can see on the daily that we are in the discount area of this red range. We took some internal range liquidity. We can see that we're slow to the downside here. Not really strong to the upside, but we could see that we were coming above previous daily highs, above previous weekly highs. We were inside the bearish range. We are building up liquidity to the downside. So coming above Asia highs, previous daily highs, previous weekly highs inside the premium of a range is just structure and liquidity on my side. So cleaner, it doesn't get much cleaner than that. If you get an entry, just take it. In addition to that, I said first we need DXY to come higher. Well, DXY came above. To come lower. What can we see? DXY broke below, then came above again now, but it's not important. I wanted to see DXY come below here. And then look for shorts on GU. So first of all, on the 1 hour, what can we see? Look at candles. Let's zoom in. We can see that slowdown just before Frankfurt, around Frankfurt, then that push up and that first wick closing below on the hourly. That's already indicating that although it's a strong push, on the hourly we close below. Turn out just to be retap of this level, the Asia high. Then we continue to the upside, and then we got the bearish move. 50-minute wise, let's see what else is here. Maybe there's something else. No, there's not much. So it's just this, and we got to use this for the trade. Going to the 5-minute then, what can we see? So on the forex.com chart, I know that this one is actually higher, so this could be your early sellers already. Oh, that's EU. Like that. So you can see over here, actually broke above, then here, then broke below. So this could be your early sellers. GU, sorry, FXCM, not that clean, but we got early sellers over here. And this is actually on a 1 minute, which makes it a bit tricky, but we are above all those highs. We are in an area where we can go to the 1 minute, if you ask me. So this could be your early sellers. It's clean. It's nice. Early sellers taken out. Structure being formed. Another set of early sellers here. You can see this low that led to that high. I think it just broke above. Yeah. So a minor set of early sellers here, over here. Then we got a low, high, higher low, higher high, and then no higher low being formed. So our last break is over here at this low. Break to the downside. Now you have two options really. You can either choose to take the entire buy to sell move, or you can go for the refined version, which is this one, and I will take this one and then put my stop below there or above there, sorry. Short position 52, I think it was. Ooh, they changed a little bit, so it would be 4.9. Before this was at 6.2, so my entry would have been at 5.2 this morning. but the feed of FXCM changes sometimes. I still prefer FXCM. So 5.1, that's a nice stop for GU. 5.1, 5.7, 5.6. So 0.5 pip stop loss. And then where do we target? Well, first for 1 to 4. 1 to 4 gets hit before taking these lows. You can see we're building up some liquidity here. Well, 1 to 4 gets hit before taking these lows. So that's our first target. Looking on the 5-minute, it's not the cleanest break, but it is a nice break. It's an impulsive break. In addition to that, this leg to the downside this creates internal range liquidity. So gives us a nice reason to come above and then continue down. Second target. So 80% at 1 to 4. Then Asia lows. And then we zoom out and we can actually manage the candles or track the candles. But we know where we are. So my next target would be at least previous daily lows. And I would actually target this low as my target. So this is my final target. Clean trade. Let's break it down quickly one more time. So premium pricing, liquidity building up to the downside, liquidity taken onto the upside in the form of previous daily highs, previous weekly highs, and Asia highs. Then we got early sellers. Over here, one over here, but that's not visible on this feed, so we don't use it. And then we got the break. We take the refined entry, refined entry zone of the supply zone. So refined supply entry zone. Target 80% 1 to 4. Then you could take 10% at if you don't like to hold it, you could take the remainder 20% Asia lows, or you can maybe take 10% Asia lows and then leave the other 10% running for this low. But I would say target this low as there's a lot of liquidity here. And if you follow the structure, you should actually be able to target this low, and it will be an additional 3% on a risk-free peanut that's running. So why not? Why not just leaving and taking extra 3%? That's almost another trade. It's quite a distance, and yes, it would have been more if you just left the entire volume in the trade, but better be safe than sorry. And also you get take the risk, you get paid to take the risk. So it's those two. If you can manage that, then easy done, easy solved, easy dusted. All right, that was the first breakdown. I will catch you guys in the second case study in a minute. Peace out.